Good morning. All right. Charts first. So yesterday started down with a nasty drop. There was no follow through to Friday's reversal day. All the buyers pretty much disappeared after Friday's up day. So kind of a little bit of schizo price action going on, and from day to day. So there was that, looking at it, the bar, big down day, but wind up, dropped in the morning, and then things just kind of went dead. We had that in the green room, that one trade sat in there for a couple of hours, eventually paid off a bit, but didn't go very far in the ES. So here we are seeing, all right, what is this going to do now? Kind of get that's what Dan calls a bull sandwich, big red bar and a green bar and a red bar, and it's supposed to follow through to the downside. This morning it's just holding here, so we go through the factory work and see, well, how far can it retrace and how far can it close back into the red bar? And we get sometimes referred to as a Christmas tree kind of a pattern where just red, green, flip-flopping back and forth here. So getting a little trading range. I marked this off as a minor resistance area, support, and depends if this can continue to churn its way up into here. Well, the further it can retrace and close, well, obviously, the more bullish it is on that particular day. What does it mean in a bigger picture? Well, improvement, but really not a lot. Meaning, if it closes up here, of course, we're going to be thinking that it continues to move up, and we've got several days of consolidation, but it's whippy consolidation versus, we have prices pulling back either within an uptrend or in this case, a downtrend, and the ranges contract. And what creates a opportunity, a trading opportunity, is when we have a scenario where the ranges contract after a move, not a wide whippy range like this, whereas prices come down. It's kind of something like this. I'm just picking this on the 15-minute because it's what I have to look at, but where you've got, multiple bars coming down and the range contracts, and then you get another bar, and you can see what that looks like on the 5. But what we want to see in the time frame that we want to trade, where there's been this expansion in ranges and then it begins to contract, and that's really not what I'm looking for, because it only took a few bars, but it's something to say, hey, the contraction in ranges here, the momentum is slowing down. And we look at the details of what we call bar by bar analysis. And it's like, hey, this was a breakdown. It was a wider range red bar that broke down and it sprung back up. And now we've got another one. So we want to see multiple bars creating a bottom. And we want to see that happen where the range contracts versus this mess that we have going on here where it's pulled back. We've got that greater than 100% retracement concept, but it's whipping back and forth here, which could be okay for, day trading purposes, but from a purpose of a counter trend trade for a swing trade, this is not what we want, because the odds of getting whipsawed are pretty good. So what is more likely, I think, to happen here, especially after yesterday's day, well, yeah, Robert, we need more patience, or we get pleasure out of getting whipped around. I guess some people might like that, gonna joking a little bit here, but you get involved in something like this and you lose money, or maybe get lucky enough to make somebody get whipped back and forth again, and it's not a pleasure. So yeah, we avoid it. So everything that we talk about with concepts in technical analysis is related to a picture. And, Dan and I, our goal here is to explain the pictures and the details of these pictures so that you can recognize, one picture from the other picture, which oversimplifies what we do. But in the reality, that is what we do. Whereas we look at other concepts, is it going up, down, or sideways? How did it go up, down, or sideways? What's to the left? Support or resistance. How did the picture form, the bars form when it got to those reference points, and so on. And so as we see something like this, where things are just wailing back and forth like that, we recognize it and say, I'm not interested in getting involved in this. Let's move on to something else. And if we can't find something else, well, we'll just sit on our hands and do nothing. Yeah. McGraw, negative gamma creates these wide whippy patterns. I think I appreciate your passion for this gamma thing, McGraw. I found it helpful in some ways, but realize that what creates these patterns, these whippy patterns, in reality is uncertainty. How people deal with that uncertainty, right? Whether that's through options or futures or whatever people trade, the picture is a picture of uncertainty about whether this area of support is actually going to hold. And there's a huge difference in opinions about that. So where we not normally, every single day of looking to the left and looking at what the trend is and saying, hey, and even this is still in an uptrend. I'm willing to take a position here. I'm not saying personally, but, just institutions, people in general. It's in support. I think it'll hold here for whatever my criteria is. And the volatility and this, wide ranges are like, well, there's a vast difference in those opinions. And someone else was saying, hey, for whatever reasons, tech is bad, interest rates are going up, blah, 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 blah. I didn't think this is going to hold. And you know what? I need to get out of some positions. And so, things wail back and forth where these wide differences in opinions are occurring. And then, no, Joel, it's not just seasonal gravitation, because I've seen plenty of times where this time of year, there's been little to no correction. And, so we have these seasonal things are something that we use as one of our tools to say, this is what historically happens, but it doesn't have to happen. So we can't look at things in trading and these concepts that we talk about in an absolute sense. And this is the kind of like the rub for all of us, because it flies in the face of what human nature wants, right? We all want certainty, and we all want confidence in that. You can make the analogy of driving your car. It's like, hey, when I see the green light, that means go. And that means that the guy with the red light's going to slow down, versus, hey, it's chaos, red, green, and everybody's, smashing into each other. And this is kind of what's happening here. Everybody's smashing into each other, and things have to settle down. And that's not happening yet. Maybe it does today, but what I was explaining also was that, as things come down like this, and it's, whatever the time frames are that are being traded, as prices come down to a reference point, and then, the momentum slows down, what we have, we're talking swing trades, and we've talked about this in the green room lots of times, about how prices come down, and then over the course of 2 or 3 days, that contraction in ranges and volatility create a nice base on the hourly chart. And, that's what we were looking at yesterday with this ES trade, where, it was rather erratic. Let me just go back to it. Was that yesterday? it was, I think it was right around here where we sat through this trade where it came down and retested and just whipped back and forth. But so this was rather messy, but it was going sideways and getting tighter. And then, it popped up and it just couldn't keep going and came back in. And so, it was a profitable trade, but it had the potential to go much further. The point is, turning points don't happen like this, high probability tradable turning points. They happen where things settle down and ranges contract, and we don't have that now. So we're just gonna, do our day trades. And if we find setups to trade intraday on stocks, possibly, credit spreads. But as far as swing trades related to the markets here and lots of stocks, this range contraction has to happen, or it cannot, effectively make some kind of a turn here. The ranges contract and there's the next leg down. And then where more are in agreement as to, hey, let's just call this a value area, which I don't know where that's going to be. Will it be at this pivot low, or will it be at this pivot low, or will it be at this pivot low? I don't know. But I know at some point that is going to happen, and the patterns will take shape as they historically do. That set up an opportunity. All right, let's take a look at others. For comparison, relative strength and weakness, and clearly relative weakness. And yesterday, I think most came in after Friday's strong selling. I'll get to IWM in a second, which has been doing okay. The expectation was, hey, this thing could pop up for a day or so before sellers would show up again. And, the Qs did. And even I remember Dan saying, hey, look at Goldman Sachs and look at JP Morgan, and the financials were doing, great first thing in the morning. And tech was, that looks like terrible, what was going on there. So there was this other craziness going on there. And then all of a sudden everything gave it up and down it went. And so now we've got this wide range bar, and this is, look to the left, there's a pivot, which is likely to at least consolidate, I think, in the morning. And most likely this typically ends up with a choppy consolidation day at the bottom of that wide range bar. Let's look at the Qs. So we don't get the 24-hour. That didn't, the futures traded above and then got slammed down. So this was just a gap down, and it just never was able to get any traction to turn back around again and close relatively near the low. And you can see that pivot low over there to the left. Things stabilize in that area. A lot of times it breaks down below it and then it begins to stabilize. And so today, this could be that typical stabilization day that occurs after a wide range bar down like that. And that doesn't mean this down move is over by any chance, right? Because ranges have to contract, or this thing has to fall. Possibly that's in the cards. Stabilize a few days, and then, which I would just love for this thing to fall like the proverbial rock off a roof, straight down and create a monster void. And then it may, whether it hits the 200, or come, let's look, is the 200 aligned with anything? And kind of, it's got this support here and this pivot. So it could poke down through it before it begins to stabilize. That would be just fine. So the Russell IWM is just, a mess. I mean, been in a trading range for a year. And I guess in one sense it's good, but it's got to break out or break down, which way is it going to go here? And it's right in the middle of the range, and it's just whipping back and forth. So, trying to trade this is like, you want another punch in the face? And it's chaotic, and there's a tremendous amount of uncertainty here. That's what this picture is. It's a picture of uncertainty. Stay away from it. right? Well, we need some event. And you say, well, what the hell's an event? It's something that, you know, let's just for example, this thing gaps down tomorrow down here. And we look to the left and say, oh man, that's the bottom of the trading range. Just pivots down there. Let's buy it above a 5-minute bar's high. And by the end of the day, it's a giant green bar. Well, there's still a mess to the left, but that is something powerful that suggests, hey, a little bit of contraction, a little consolidation of the gain, that could go higher. Well, vice versa. It gaps up here and it never pulls back. And then it begins to trade higher. So right now, we've just got, I wish I had a better word for a mess, but it's appropriate. Overlapping bars and tails with moving averages, intersecting prices. It's a picture that just communicates, stay away, or, swim with the sharks in here and, take a beating. Lose an arm, lose $100, lose $5,000. Or try and, make sense out of, what's going on here. Good luck. There will be better times. Same futures there, whipping back and forth. YM, just whipping back and forth, back and forth. So far, just an inside day. We got similar patterns, big down move, consolidation, coming up to resistance, tails on the weekly. So far this week, it's only Tuesday. Stay away. Bitcoin. Wow. Right. Power move, wide range bar. Right. Last week we talked about this retest, and obviously buyers are enthusiastic about this, and it's coming right back up to the highs again. Oil almost to $80. Should get there. A little bit extended there. So how do we look at extended? Well, with visual aids of moving averages. So this got a little extended, but it just come out of a consolidation. This one up, pull back, now and up again. So the further it gets away, not only from moving average, actual price support, the greater or the more extended it is. Common sense. Gold, rolling over at resistance. This thing's just trying to get its footing here, or maybe not. Don't have any kind of clean patterns there. Let's see what silver's doing. Still holding that low for now. See what it does at resistance. So question is, does this become a downside shakeout? It's going to take a few days where you get a wide range bar breaking down. It's supposed to go lower. It retraced 100% back up again. It's at resistance. This goes sideways. This is a buy. If it goes sideways and then clears the sideways bars, how many bars? Will it be the same amount? Maybe. Maybe it'll be 4. Maybe it'll dip down and form a bottoming tail bar, which would be great. And then you buy the breakout, with downside shakeout pattern in an area of price support, higher time frame. Transports, just another damn mess. And if this can't get something going here, right now we're just in observation mode, day trade mode, credit spread mode, waiting for this market to shake out whatever it is, debt ceiling, Corona, blah, 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 China, trades, whatever the Fed's doing, they don't know what's coming. So whether they're trading multi-billion-dollar hedge funds, some prop trader, right, some mutual fund, some chat room. This is just saying, together, we really don't know what's going on, but everybody is trading their opinions as to I think that support will hold. Or I think that resistance is going to be too much. I'll sell there. I'll buy there. And intraday, it whips back and forth. So trade smaller. If you're going to trade, always pick the quality patterns, see what they'll do. And the bigger opportunities will come when this uncertainty dissipates, which will be displayed in the charts. All yours, Dan. I don't hear Dan.
Oh, yeah, my bad. Yeah, my bad. It's a stupid mic again. All right, so I said all our opens are fine. I was saying a lot of things Greg was looking at tomorrow. MT Live is continuation patterns. So those, so many charts we look at, I could put them in 20 different MT Live topics. But our Mara is doing fine with Bitcoin up. We said yesterday into the close, our bias was day trade, whatever way we break. But if we did break down, we'd continue to trade down, but kind of be on the lookout for some type of exhaustion or downside shakeout at one of the reversal periods. So now, based on this gap, my bias is 30-minute high or pull back to minor support and a bullish turn. So it's so simple. But I said I like HCA short as that's a little continuation bar. Jim, am I comfortable with Netflix? No. That's why I was telling people in the room yesterday, if you're not in it, don't take it. It looked fantastic at the first sense at the market open, and this thing was off to the races. We have the 585 with a 1-to-1 stop loss. Last I looked, it was 230, and we sold it for 130. But it's gapping up. We're in hold our breath mode. Greg calls it an intelligent hope mode. Thomas, UMG, and SAR. That's strong. I mean, you know the drill. You're getting on board a moving train. And again, you heard me say tomorrow is continuation patterns. This is not a continuation pattern. Hey Jim, at maybe 9:45, remind me, and we'll take a look at it again. So I mean, you're just getting on board a moving train. I mean, your no-brainer entries were this wide range bar at the 20. It was this pullback and reversal at the 20. Now there's no-brainer entry. So unless you're just day trading, I can't help you on the daily. SAR, there's no volume and there's no pattern. Do I have the right symbol, or do you have the right symbol? I mean, it is bullish weekly, but it's just going sideways here at resistance. Has no volume. It's not my strike zone. 189. So that's a something bar pre-market. Let's just see what it does on the first 30 minutes. Hey, our little REI, I see moving up here. We entered this as a core trade yesterday. And wow, look at what we actually entered it 2 days ago. My bad. We entered it on Friday. Look at that beautiful monthly. So my target's 6, but we had such a monster move in one day. We sold a third into strength, and we're holding 2/3. So that's looking great. RTX, I like. Maybe 30-minute high would be fantastic. Uber, there was an article in the journal today that says Uber and Lyft are still, inflation's going to be with us a long time. They said they're having labor problems too. I mean, who isn't? AGFY, $21, gapping to no man's land. Tissy, bottoming pattern 362, 30-minute high. What was that? That was my REI. That's why I had a GTC. I had a GTC, folks. I was short the $3 puts, and I had a GTC at 5 cents. So that's what just got filled on me, right on the gap up. Somebody took my 5 cents. CMTL, nasty gap. I look at all the overlapping bars. I don't trade things like that. We trade compelling patterns, and that surely is not one. VeriSign. Why do I have an up alarm? Tick 853. VeriSign I like short. I'm going to set a new alarm 204.50. IWM is weak. In the FANG department, Qs look the best for day trade. Qs look the best. Let's give it maybe 5 minutes. That's a nice gap. It's a nice pre-market. It's a nice first 1 minute bar. It's only 9:31, but that's a beautiful bar right now. All right, so FANGs, Apple.